So let's continue on the conversation on where oil is going to go in Q4. What's your view when it comes to demand, supply, and stocks? Where do we stand?
Yeah, the oil market right here, right now, is visibly tight. We can see it in a broad, sort of consistent set of indicators. We can see it in our balances. We can see it in inventories which are drawing. We can see it in a whole host of price signals. It's not just simply the spot price of oil, but the slope of the forward curve, physical differentials, product cracks. When you put it all together, the oil market is undersupplied. We put that undersupply at close to 1 million barrels a day for the fourth quarter. We think that will continue, and with that, prices will be supported, we think, in the mid-90s. The reason why we're undersupplied is largely because of OPEC cuts. So as you roll the analysis forward into the first quarter of next year and all of 2024, the question to answer is, what is OPEC going to do with this production decision? But as long as these production cuts last, the market is simply tight and prices are supported.
Okay, so OPEC has said they're going to extend those supply curves to year end. What happens at the start of 2024? Are we on track for an unwind?
Well, the first quarter is typically a part of the year where demand seasonally takes a step back. So typically 1Q demand can be a little softer, then we recover in 2Q. In 3Q we get a little strength, then we flatline in 4Q, and 1Q we take a step back. So historically, therefore, it's quite rare for OPEC to unwind production cuts in the first quarter. In the past there have been several examples where there was an OPEC agreement for a full calendar year, but then as the year got to its end, OPEC said, okay, we'll extend it into 1Q as well. On this particular occasion, there is a sequence to keep in mind, is that the official OPEC cut cannot be unwound before Saudi Arabia unwinds its additional voluntary cuts. So the first question that we need to answer is, what will happen with the Saudi voluntary cuts before we can start to think about the formal OPEC cut? But our call is that much of this will roll forward into the first quarter of next year.
Seems like OPEC has a significant amount of influence over the market now as well. And just to pick up on something you said before, you're tracking oil at around 95 plus USD in Q4. Why does 100 USD feel like a stretch in your opinion?
Well, the oil market tends to be anchored by either one or two levels. It's either anchored by a level that is effectively sort of centered around the marginal cost of production, and there can be a distribution around it. There are periods in the oil market where we need to balance the market through demand destruction, where we simply can't supply the stuff quick enough. And we must balance the market by basically pricing out demand. Prices that are associated with that, they become sort of 110, 120, 130. So if you want to have an oil price, say, substantially above 100, and we're at 95, so on all day we can go to 100, but substantially above that, you would really need to answer yes to the question, do we need demand destruction? And frankly, if you look at the oil market right now, it is tight, but it comes with quite a large amount of spare capacity in OPEC. OPEC market share that is quite low. So our suspicion is that if we were to go above 100, then OPEC would probably add some barrels back to the market. This is not like last year, where we did think for a while that we needed outright demand destruction. At the moment, we're not quite there.